Today, we're going to answer one of the most common questions in the XRP community. What would be the price of one XRP if it managed 25% of the world's international remittances? This isn't a price prediction or investment advice. It's simply a theoretical calculation based on available data. But it's an interesting way to visualize the scale of what Ripple's network could achieve as global payment infrastructure transitions to the ISO 20022 standard, which officially takes full effect on November 22nd. So let's break down the numbers. According to the latest World Bank estimates, the global remittance market, that's the money sent by workers abroad to their families, reached $905 billion in 2024, up from $865 billion the year before. By comparison, total cross-border payments, including corporate and institutional transactions, are around $190 trillion. But in this case, we're focusing solely on remittances. Now, analysts like Smoke, a well-known figure in the XRP community, have pointed out that Ripple's long-term goal is to capture up to 80% of global cross-border payment flows by 2030. Even Brad Garlinghouse, Ripple's CEO, has publicly stated that achieving at least 14% by 2030 would already represent a massive success. So, in this video, we're focusing on a 25% scenario, somewhere in the middle, ambitious but realistic. If XRP were to process 25% of the world's remittances, that would amount to approximately $226 billion in yearly transaction volume. Now, the interesting part comes when we calculate the liquidity needed to support that level of utility. Google's AI model, Gemini, analyzed this scenario and assumed a 10% liquidity ratio, meaning only a fraction of the total volume needs to be held in XRP at any given time to settle those transfers. Under that assumption, the required market capitalization for XRP would be around $11.31 trillion. With a circulating supply of 60 billion XRP, that gives us a potential token price of roughly $188.50 per XRP. Of course, this number isn't a prediction. It's a reference point that helps us understand scale. It simply shows that at 25% of global remittance volume, the network value required to process those payments would imply a price far higher than current levels. Now, it's worth noting that this calculation doesn't include other growing use cases like tokenization of assets, derivative markets, liquidity pools, or ETFs, all of which could add significant demand for XRP's utility beyond remittances. And that's what makes this conversation so compelling. Even if Ripple were to capture just 10% of global remittances, the resulting price per XRP could still be multiple times higher than today's value. At 25%, the $188 figure becomes plausible under real liquidity mechanics. Not speculation, but network function. To put this into context, a market capitalization of $11 trillion would place XRP ahead of every financial institution in the world, surpassing Bitcoin and sitting just below gold in total market value. That's how massive this potential use case really is. But again, this isn't a forecast. It's a mathematical scenario, a what if. If Ripple's technology continues to expand its footprint, if banks keep joining the RippleNet ecosystem, and if ISO 20022 integration becomes universal, then it's clear XRP could become one of the most strategically important assets in global finance. So, if you've ever wondered how high XRP could go in a real-world adoption model, now you have a framework to think about it. Based purely on numbers, if XRP processes 25% of global remittances, the math points to a price around $188 per coin. And that's just remittances, not full cross-border settlements, not institutional transfers, not tokenized assets, just one segment of Ripple's entire ecosystem. As we approach the ISO 20022 deadline and the next wave of institutional adoption, it's becoming clearer that the question isn't if, but how much XRP will handle in the future of payments.